The crypto crash is here and it was impossible to predict. Shiba Inu is down 83% in the last year. Solana is down 93% in the last year. Even Bitcoin is down 73% in the last year. How did this even happen? Who could have seen this coming? Just in, US probes FTX over handling of clients' funds and lending. The SEC and CFTC are investigating whether FTX properly handled customer funds and its relationships with the rest of SBF's empire. Sam Bankman-Fried just sent the entire crypto market in a frenzy. I hope you have your popcorn ready because the fireworks show has just begun. Just in, Crypto.com suspends USDT and USDC deposits and withdrawals on the Solana chain. Is the entire market crashing? Well, it already was. The recent FTX development just put it in 6th gear. Breaking, Binance reportedly unlikely to move forward with FTX acquisition following review of finances, CoinDesk reports. This was Sam's life raft, only to find out that Binance was like, nah, we'll pass. Sam Bankman-Fried, the co-founder of FTX, lost 94% of his net worth in one day. If you thought Zuckerberg was having a rough year, imagine losing $15 billion in a single day. 1 million invested in FTT yesterday would be worth $180,000 today. To all the young investors who bought crypto as your first foray into the world of investing, this is what risk looks like. Buying coins or tokens with no inherent value and only banking on the line going up is essentially gambling. And when the music stops, you're out 90% of your investment overnight. Just in, several Coinbase coin services are down. Coinbase's trading volume is down significantly, the assets on the platform are down significantly, their net revenue is down 200 to 400% from last year, and they lost $500 million this last quarter. The entire space seems to be crashing with no clear bright light at the end of the tunnel. Even the guy known for his last-minute heroics couldn't save FTX. Breaking, Binance strongly leaning towards scrapping FTX rescue after first look at books, CoinDesk reports. If Binance doesn't buy FTX, it seems like the pain will have just begun. FTX is most likely insolvent, and SBF's gambling is going to cost his customers money. A 30-year-old crypto billionaire wants to give his fortune away. Well, that happened quickly. I think this meme is hilarious. Scientists invented a bracelet that converts stress to energy. Crypto traders. Kobe tweeted, if the Alameda FTX hole is too big for Binance, maybe they can cover up to $250K per user, saving the entirety for smaller accounts, i.e. people who actually need the money, and letting the larger ones eat L's and just take Alameda to court or something. It sounds like there's a greater than 0% chance that people's money on FTX could be gone. I obviously hope that's not the case, but Ponzi schemes fall fast, and you all saw what happened to Luna, Three Arrows Capital, and Celsius. Kobe also tweeted, the rumors for this blowup seem so egregious and unnecessary to me. I can't imagine running an exchange that does mid 8 figures per day in revenue and thinking, how can we leverage this for more? I can't imagine risking a $40 billion business to try and get a multiple on client deposits. The problem with these institutions is the underlying assets are worthless. The second you begin leveraging a worthless asset to buy more worthless assets, you're just creating a house of cards. Once the bear market hits, surprise, everything is a Ponzi and your entire empire collapses. The FTX platform wasn't a Ponzi scheme. It's just that SBF leveraged his worthless FTX tokens to buy more worthless tokens where a potential problem opened up. Once CZ tweeted, sounding the alarms, a bank run was created, which is pretty obvious from this chart. Just in, FTX had $6 billion in net withdrawals in 3 days. That sounds like a bank run to me. I think so many people were traumatized by the losses experienced during the 3AC and Luna crash that they're withdrawing their money the second they hear about the possibility of another crash. Just in, majority of FTX legal team quit, Semaphore reports. It's entirely possible that this FTX fiasco is going to kick off a brutal crash and multi-year bear market for the entire crypto market. Just in the last 24 hours, Bitcoin is down 10%. The sales pitch to me was that Bitcoin and crypto was a store of value. Volatility and losing 10% of your asset in one day is not a store of value, no matter how loud you try to scream. Dogecoin is down 7.5% in the last day. Dogecoin is possibly going to be used for payments, I've been told. I just don't understand how you could possibly operate a payment system where the payment loses 7.5% of its value by the time you can batch your transactions. Just as I was making this video, Alameda Research's website is now a private site. The crypto billionaire and 2 of his deputies poured nearly $69 million into the 2022 midterm elections. That money may have been better spent shoring up his cryptocurrency exchange, which is now facing a liquidity crunch. I hope all of the people who put money on the FTX platform are able to recoup, because Sam has nuked his reputation in under 24 hours, and I'm not confident this is going to have a happy ending. Investors have lost 80% of their money this year. I would not be surprised if all of the coins are down another 50% from today's price by the end of the year. Investing in crypto was and still is gambling, and unfortunately a lot of new investors are finding out that it wasn't the get-rich-easy scheme that some believed it to be. Crypto is the best Ponzi scheme ever created. Just like all Ponzi's, the first investors made life-changing money, while all of the newest investors got wrecked. Every single coin is down 60 to 80% this year, and the bottom hasn't even been reached yet. Crypto is gambling, not investing. This is what happens when the Ponzi collapses. Thanks for watching.